Morning, everyone, and welcome to the Ankerstar. I'm your host, Allison Ankerstar, and today we'll be talking about why we saw the market rally yesterday, what happened with Roblox earnings, and what happens when a bond matures. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The market rallied yesterday on the report that Russia has pulled its troops back to their bases. Will the market rally continue?
Hey, good morning, Allison. Good morning, everybody. The market did rally nicely yesterday, as you can see on the chart here. Though this is the S&P 500 that we're looking at. Again, 1 year chart from left to right in the upper right-hand corner. Most of the rally was the overnight rally. So, the before earnings. That's why you don't see a big green candlestick here. You only see a small one off to the right where the arrow is there. But the market sold off pretty hard for 3 days, so the market rally was not in itself a surprise. And then when you talk about the Russian troops, supposedly coming back from the border, if you will, or pulling back from the border, almost the market could have rallied more here if you really look at it, because we were at 3 or 4 days up here where we're back at a 460. So I do think the market rally has more left to go based off of this chart. So obviously it was great news about potential de-escalation of the Russian Ukraine situation. So I would think the market would go higher here. But when you look at today's futures on CNBC, I'm showing you here, you can see that things are in the red. So I think we're back to that where we're in a wrestling match, if you will, between the de-escalating geopolitical situation is good for the market. Market should go higher and recover here, versus the interest rates and the Fed situation. The Fed meeting minutes are supposed to be out. Or will be out this afternoon, so those will be dissected. That's where you get to hear what everybody's saying behind the scenes instead of just what Chairman Powell said at the release. So I think we'll know more later today, but I think this morning, ultimately the market could go either way today.
Switching to earnings, Roblox released earnings after the bell yesterday, and the stock is down 17% overnight on the news. Is it time to bail on Roblox or buy more?
Well, that was certainly a surprise, the Roblox situation. And, Kramer, you can see him talking about it down here where it says Roblox tumbles on Q4 miss, excuse me. So the CEO is going to be on this morning. I think we're going to find out a lot more behind the scenes. But yeah, it was a brutal sell-off. The sell-off is continuing. Here's the actual Roblox. It was up 7% yesterday. So that mitigates it a little bit. The fact that the stock has been rallying going into earnings, because nobody really expected this kind of miss. And then you can see, obviously, stock got hit big and it's continuing to leak, down 22%. I can't imagine that continues. I think when the CEO speaks this morning, that'll add a lot of insight as to what actually is going on with the company. But when you think about Roblox and the attraction of it in the long term, and again, that being that it's going to, largely you started with Minecraft, which was wildly popular. Roblox took it to the next level. As Allison said earlier, before we were on air, Minecraft on steroids. So it is, but it's really kind of the entry into the metaverse mentality. That's why it's so attractive. It has its own currency, not a cryptocurrency, but it has Robux, which are its own currency for use in the game. So you're raising a generation that has grown up on this game and is used to transacting in the metaverse, if you will, or a make-believe, digital/world. There are people, one of the reasons I liked investing in Roblox from the beginning is they said there were over 100 people making six figures a year by building things inside the Roblox universe, if you will. And it's just like that, if everybody can get in and build and this thing has long-term staying power, it's going to be a huge moneymaker. So is it right now? No, it's absolutely, causing a ton of pain in portfolios this morning. So really, when it comes down to, should you bail on it or buy more, certainly this takes Roblox and puts it into a speculative category instead of just a high risk category. So this is or aggressive category. So depends on your speculative percentage in your portfolio. If you don't have any, you got to get rid of Roblox, right? You can't just continue to hold on to it here blindly while it's selling off. If you do have a speculative portion of your portfolio, though, that's where Roblox fits in, especially now after it's sold off, whether you have some or you don't. Now is the time to add to that position. So really, it kind of comes down to how much you already own of the stock, but I like it from here.
Last question. We know that you like to use individual bonds instead of bond funds, but what happens when an individual bond matures?
Well, sure. I'll talk about bonds here for a second. It came on camera there. So here's why. So when you look at an individual bond fund, you're subjected. There's two things going on. It's a bond fund has a whole bunch of bonds in it. So I mean, you knew that, but it's the aggregate of several bonds, and it acts differently. So once you take several bonds and package them together, then the entirety of that group is extremely sensitive to interest rates, right? There's bond duration, which we're not going to go into the math behind bond duration, but that is a measure of that sensitivity. Now, so what we're looking, that's one, is you have a whole group of bonds that becomes very sensitive. And then secondly, you're also subject to herd mentality. Anytime you're in a fund, that means the fund can sell off because everybody else is selling off, even if it shouldn't, right? So you're subject to that. And to a certain extent, in an open market, you're subject to that in all things, but certainly in a fund where there's a lot of people that can pull large amounts in, put large amounts in or pull large amounts out of the fund at one time. So here's what I have here on the screen is a high yield bond fund. And just look at, it was up at 49. This is a 3-month chart. Up at $49 a share, it's down to $46.50 a share. And this is your safe investment. This is a bond investment that's supposed to act opposite the market. It has not acted opposite the market. We talked about yesterday, it's kind of a sell everything kind of sell off. This is a buy, hold for a long time and collect the yield. We'll scroll down here, it's yielding 5.5%. So you do, by holding it, you end up buying more if you're reinvesting, or you get the same yield from the entirety of the fund. But that can be a little bit problematic if you have a large portion of this, and then all of a sudden you're watching your portfolio drop with your safe money. So that is obviously a big concern. As far as why I like individual bonds, I want to show you a chart here on this is how individual bonds, the cash flow behind. So when you buy an individual bond, make this a little bit bigger here. When you buy an individual bond, it's a contract. So I like to construct a bond ladder instead of being in a bond fund, take a bunch of individual bonds, ladder them out so they are, they mature at different dates. Generally, when I do this, a client account has to be over $500,000 to really make it worth doing. But if you get up into the bigger accounts, taking these bonds and scheduling them out is really the way to go. It's a little bit time intensive. But here's the bond investment cash flow. You're going to pay a price for a bond. In this case, this is a $10,000 bond. And it's yielding 8%. So I'll explain that here in a second. So the person paid $8,500 for this bond. Sometimes bonds are cheaper. The bond, when it's issued, is worth face value. So if you buy this on day one that the bond is created, it would be $10,000. But they trade on the open market. But whenever you buy it, in this situation, the person paid $8,500. So your cash flow out of pocket, $8,500, and then it yields 8%. So there's $10,000. That's going to make $800 a year. Bonds pay every 6 months. Unlike a bond fund that's going to pay you every month because it has a whole bunch of bonds in it on different schedules. This pays, $800 a year, but it does it twice, every 6 months. So you get half of it on, 6 months in, and the other half, 6 months later. So really, you're getting these coupon payments, or what these called for year one, year two. They're always 400. They're steady. They're rock steady. It does not matter what the market's doing. When you design a portfolio for income, this is one of the things you take into consideration. You can count on this. The only way to not get this is if the bond chooses to go into default. If you default in a bond, generally the stock price is going to go near zero before the bond, a company is going to default on their bond. So I've never held one to all the way to default. I've had some that have been in trouble and we ended up selling them, but that is extremely rare that it happens. If you get your coupons, $400 coming in, and then when it matures, which is the question, is what happens when it matures? You do get the final coupon payment. So that's why, and then the money of whatever, the face value of the bond. So this is a $10,000 bond yielding 8%. So you get the last coupon payment, which again is going to be that 6-month payment, which is 400, as well as your money back. So that it's predictable, it's known. It doesn't matter what your neighbors are doing as far as the herd mentality. People can be buying and selling out of the bond market. You don't care. You don't care about interest rates. You don't care about any of that. And, so in conclusion, that its ability to stand apart from what's going on in the real world and just pay you what, the contract that you've entered into, in conclusion, that's why I like the individual bond option.
Thank you everyone for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. That's all we have for today's show. I'm Allison Ankerstar and we'll see you back here tomorrow.